introduce you, James.
Okay.
So James is from Freddie Mac. He is the manager of the affordable lending on the Freddie Mac single family client and community engagement team. James is responsible for rural lending and Native American lending and their choice renovator mortgage product under the Duty to Serve initiative. James has over 25 years of experience in the residential mortgage and housing industry, spanning housing development along with the primary and secondary mortgage market sectors. Prior to joining Freddie Mac, James was the manager of strategic initiatives with a nonprofit affordable housing developer and an account representative with the correspondent lenders and Freddie Mac. James holds a BBA in finance from Howard University. Well, we really appreciate you, James, coming here and talking to us today about improving home energy efficiency with GreenCHOICE mortgages. So I will have you take it away from here.
Well, great. Thank you so much for that introduction. And I forgot I sent that to you. But hello, Jeffrey, Melissa, and Valerie. How are you? I think there's Trudy on as well. It's a pleasure to meet everyone. So what I think we'll do today is to go through a little bit about our GreenCHOICE product. It's our energy efficient mortgage offering. And then after that, let's have some conversations. Let's just talk about how you think it could be helpful in the markets where you guys serve. So a little bit about me, as Christine said, I'm with Freddie Mac. I actually serve on their Duty to Serve team. And Duty to Serve is a directive that Fannie Mae and Freddie Mac has actually gotten from our regulator, FHFA, for us to add liquidity and increase lending in underserved markets, affordable and underserved markets across the country. And our way of doing that will be to address affordable housing needs as it relates to manufactured housing. We do believe that manufactured housing is a viable, affordable option alternative. Rural housing, and that's actually where I concentrate my work. And within the rural housing space, I also work in Native American lending. And then our choice renovation suite of products is also a part of my charge. I do choice renovation and GreenCHOICE, which is our renovation suite, is what I like to call it. And then finally, we have an affordable housing preservation component that talks about community CLT, community lending trusts, and things of that nature. So we're pretty busy. It is a congressional mandate. We have to report back to our regulator almost on a quarterly basis. So it's a lot of government relations that I never really thought that I would be a part of, but it's been interesting. There's never a dull moment as it relates to dealing with our government regulator. So with that, let's talk about GreenCHOICE Mortgage real quick. So we'll start with a test. How many people thought they were going to be tested today when you got on this particular call?
Not me.
So according to the U.S. Department of Energy, how much does the typical household spend on energy bills each year? Anybody?
C.
I say C.
In Vermont, it's C.
And you guys are right. It's C. It's C. More than half of a household's energy usage goes toward heating and cooling. You know, and that survey was taken before the pandemic. Can you imagine now how much of our heating and cooling our energy usage goes towards heating and cooling? You know, we all work from home, we teach from home, we learn from home, the whole 9 yards. So it's an important piece. And there are also an increasing number of states that are requiring homes to become energy efficient as we go forward. So financing water and energy efficiency improvement, it's a big deal. It's not new for Freddie Mac, but we thought that we would. Late last year, we released a product called GreenCHOICE Mortgage that allows you to really finance those improvements in one loan. So you can finance the purchase of a home and the renovations as it relates to water and energy efficiency in one loan, in one closing. In fact, we'll allow you to finance eligible improvements up to as much as 15% of the as completed value of the property. Also with Green Choice, I'm sure you guys have heard of the various energy reports that are out there. ResNet's HERS rating, and then you have the Department of Energy Score, and then there are other companies as well that have these energy ratings. We don't require our energy report for any of these renovations unless you exceed $6,500. Otherwise, no report is required, which is making it is being received well with a lot of our lender partners out there. So again, you can deliver these mortgages to us before you actually complete these renovations and upgrades. And we're having incentive for lenders out there, and we say, hey, if you deliver this product to us, we'll credit you $500. And lenders are using that credit for a variety of things. You know, in the instance where you have to get an energy report, they can refund that back to the buyer because they had to get an energy report for upgrades exceeding 6,500, or they could just pass through to the buyer as an incentive. So, but we leave it up to our lender partners to decide what they do with that little incentive. So let's talk about the kinds of improvements you can make. All of the improvements on this slide tend to be less than 6,500 because let's face it, people do not want to go to the expense of an energy report unless they have to. So we think that there are some really efficient and useful upgrades and renovations that you can make without exceeding that 6,500. We're talking about programmable thermostats. You can get that Nest thermostat that everyone loves. I personally love it. You can replace windows and doors. You can air seal the house. Caulking and weather stripping is also a very efficient and cost incentive for making your home water efficient, more energy efficient. Low flow water fixtures and solar water heaters. All of these are just examples of small things you can do, but it will have a big effect on the energy efficiency of your home. Okay, so we chatted a little bit earlier about, you know, when your home energy audit is required. We talked about the HERS report. We talked about the Department of Energy report. But what does that actually look like? What happens when they do those energy reports? They actually come in and they do a room by room assessment of the energy usage for that particular house. They blow air and to see how much air escapes the house. They use infrared cameras to see how much heat is emanating from the house. They do tracer gas. That's a very distinct I guess tactic. Not many energy audits use that, but it is available just to see what kind of gas is escaping from the home. So there are all kinds of high technological ways that we can use to manage the energy efficiency of our homes, and that's what happens with those energy audits. Okay, Melissa, Valerie, and Jeffrey, your next question will be, may Green Choice mortgages be used to finance the purchase of solar panels? What do you guys think?
Yes.
From your slides, I would say yes for hot water and no for PV.
Okay. The answer is yes.
For both hot water and PV?
Yes.
Okay, great.
So with solar panels, and I'll give you even a better incentive to use solar panels or have those guys installed. If you install solar panels and the cost is above 6,500, we will not require an energy audit. And why is that? That's because we can demonstrate the cost effectiveness of solar panels without going to the hassle of an energy audit. And here's what we do. When the income produced from installing the solar panels, it exceeds the net cost of the solar panels, then cost effectiveness has been demonstrated. So we're talking about the income from, and this includes any tax credits or rebates that you may receive versus what it actually costs to purchase and install. And if you have a net gain, no energy report is required. It's just a matter of documenting that net gain.
What do you mean by income produced?
Okay, so there are a number of different ways you can do this. So when you install solar panels, in certain situations, when you purchase and install them, you can actually sell excess energy back to your power company. There are also tax credits, federal tax credits that are available when you install solar panels, and it varies state by state, but you get tax credits, and it's significant. You know, they caution us against talking about specifics as it relates to tax, because we are not, I'm a mortgage guy, not a tax
Sure.
guy, but we encourage you to really consult the tax laws in your state, because, you know, you get income from selling it back to the power company, you get tax credits, and then in certain cases you get rebates from your electric company.
So is it realistic? And I'm going to sound like a naysayer, and I don't mean to be, but
That's
you know,
okay.
I think about the income when we look at it, we look and say, is it replacing their electric cost, for example? So you're stating that we're not going to need an energy audit if they put in a $30,000 system, and the tax credits and rebates and all of that stuff, talk to your tax advisor, and any income that they may derive, if their state allows it, from selling to the grid is more than that 30,000 that it cost. Is that really realistic that that happens? Because that feels in our environment in Vermont, that doesn't feel like an environment that we would be exposed to very often. And I would go to Jeffrey and Lori, you guys could jump right in and help me ask this clarifying question better, but does that seem reasonable?
You know, it may not be, it may not be possible in a climate such as Vermont. I'm not exactly sure. Your energy, I would imagine your cooling, your heating and cooling costs are extreme. But in certain markets, you know, a $30,000 system may be on the expensive side, but certainly if you can find something in the, you know, more in the middle range, you could see some energy or
Gotcha.
net gains,
Okay.
net income, if you will.
Okay.
Yeah,
I
it's
would
worth
say
it.
that that's doable. I mean, if you're looking at you know, the offset of the electric bill over the life of the panels, which is 25 years,
Right.
You're not,
and you're saying $150, say, worth of electricity, you know, every year for 25 years, plus the 30% tax, or the 20, now it's 22% going into, plus the tax credit. We don't have anything else in Vermont.
Okay.
So-
But that probably would, you know, potentially get close to 30.
so Laura, you helped me out there. So income would include the electricity offset. That
Yeah.
was really the crux of my question, because if it didn't include it, I couldn't see it happening. So that makes more sense.
Electricity offset in the, you know, we call it the adder in Vermont,
Yep.
you know, the net metering credit, taking
Okay.
that into account. Yes.
Okay,
And
thank
you're also locking in over 25 years, other than the inverter, a fixed rate for that power, when that power is going to go up over time if you're buying it on the grid.
Yeah, we probably, it's in terms of what we're talking about for income, though, we probably wouldn't count that in so much as counting in the actual offset, the net metering credit, and the.
But
any
if you
tax.
had a good appraiser though, and they were giving you the PV value output, it would be in PV value. There's an escalation rate in there,
Yeah, I don't know. I mean, we'd have to look at
discount
that.
rate
as-
and an escalation rate.
Awesome discussion, guys. Let's pause here for a second, and Christine, if you don't mind, let's go around and introduce everyone. I'd like to know a little bit more about Jeffrey, Valerie, Laurie, what you guys do. You sound extremely versed in energy efficiency.
Jeffrey, would you like to go first?
Hello?
People out there? I'm not sure, I froze up there.
Okay.
Oh,
Was it suggested that I go first? I didn't quite hear.
I think you were volunteered, Jeffrey.
Okay.
You're
Well,
welcome.
that and the freeze up really made it. I'm Jeff Gephardt. I am an independent contractor. Been working for Efficiency Vermont on residential new construction services, on real estate market transformation.
Okay.
Working with a group, including a number of the folks on the phone here, trying to transform the real estate market so that buyers and sellers can accurately identify and value renewable energy and energy efficiency benefits.
Awesome. Thank you.
And I'll go next. This is Valerie Bowden. I work for VSECU, which is a credit union in Vermont. And we have a very strong focus on sustainable energy in our lending portfolio.
Outstanding. Do you guys do mortgages, Valerie?
Yes, we do. And Melissa McDonald is on the line, and she heads up our mortgage department.
So I'll go next. I will, maybe Melissa. Melissa, do you want to go next?
Sure. So I'm Melissa McDonald, and I, as Valerie said, oversee our mortgage department.
I'm Lori Fielder. I also work with Melissa and Valerie at VSECU, and I run the V-Green program, which is our program for solar and energy efficiency financing.
Okay.
So I work I work with Melissa in the mortgage side, and then I have another team I work with on the consumer lending side.
Thank you.
And we still have Trudy and Maureen on the phone. If you guys would like to tell James about yourself.
Okay. Well, let's talk more about mortgages. I have some mortgage people on the phone. All right. So that is the solar panels and how it relates to energy audits. But let's talk about how this translates into an actual mortgage loan. So the GreenCHOICE feature and choice renovation for that matter can be used with our low down payment mortgage option. So again, if you remember when we first started talking about my charge and what I do on a day-to-day basis, the crux of what I do is affordable lending. I just happen to focus on rural lending and GreenCHOICE and choice renovation as a part of that affordable lending charge. So we're all about making sure that low and moderate income families can afford to use our mortgages. And as such, you can do GreenCHOICE mortgage with as little as 3% down using one of these three mortgage products I have on the screen now. Our Home Possible is our low down payment mortgage where 3% is required for down payment. And you are eligible for this if you are at or below 80% of the area median income, or you are a first-time home buyer. Home One has no income restrictions. It's just you are eligible for 3% down if you are a first-time home buyer. And HFA Advantage is a similar product, 3% down, that we make available to housing finance agencies across the country. Any questions on that? Also, with these three products, you could possibly get into a home with 0% down if you take advantage of down payment assistance that's available in many states and many cities and counties. They just need to meet our qualification for an affordable second. And at that point, you could get down payment assistance, use the down payment assistance for that 3% down. And in many cases, we have homeowners, home families that can get to homes with little or no money out of their pocket. All right, so let's see here. Wow, this is interesting. Late last year, we did a white paper that actually studied the value added of energy efficiency to loan performance. And I'll talk a little bit about what that study has found, but you can find the actual white paper on FreddieMac.com. But what we found when we do a quick summary is new homes with energy efficiency ratings sell for 3% more than an unrated home on average. Another cool stat is that better rated homes, so we talked about HERS and the Department of Energy scores, better rated homes sell for 3 to 5% more than lesser rated homes. And it's nice to be able to validate those particular numbers because that's the whole point, right? The whole point is adding value to our homes and making them more energy efficient. So it was nice to be able to validate that through our study. And then finally, for owners of energy rated homes with debt to income ratios above 45%, their delinquency rates are lower. So the whole point of that is when we are trying to validate these products with our lender partners, we can assure them that, hey, you are going to have a better performing loan when you make loans to people who are energy efficiency minded, because they would also tend to be more mindful about making their payments on time and making sure that they keep that mortgage performing at its optimal level. Any comments or thoughts on that?
Well, you're putting it in the asset instead of the utility bill.
There you go. I think the same way. So it's awesome to be able to get that validation. So this slide really talks about what's in it for home buyers and homeowners. And I think that I'm probably preaching to the choir with this group. You guys know what it is. You have increased comfort in your home. Your utility bill is going to be lower. Again, that's the whole point. You can purchase a home and finance future energy or water efficiency improvements through the mortgage. And when I say future, you have up to, I think, 6 months to complete those improvements after you close on the home when you use a GreenCHOICE mortgage. So it's not necessarily, you don't necessarily have to buy the home with the improvements done. You could actually buy the home and do the work after you close on the mortgage. So I think that's a great flexibility that's offered with this GreenCHOICE product. And for lenders, I talked about a couple of those a minute ago, but you give your borrowers the ability to be green-minded. You know, everybody's looking for that green home, right? And as a lender, you can promote this green home through the use of this mortgage product that we're talking about here. You can help them manage their finances better because you could finance the improvements or renovations, energy efficiency renovations through a lower interest rate product like a mortgage versus a credit card or a lot of this consumer debt that people are doing around energy efficiency today. So again, you're offering that value added service to your buyers. And as a credit union, I know you guys have the best interests of your members at heart, you know, even more than your typical bank or mortgage company. It's family. You guys think of those guys as family. I remember when I used to cover mortgage companies not too long ago, credit unions were my favorite to cover because one, you guys were always thinking about the member first. And two, your loans perform so much better than a typical bank. So it was a pleasure working with you guys and being able to bring new and innovative mortgage products to you guys first because you get it. You understand what it's all about. So if you want to learn more about the product that we talked about today or any of the Freddie Mac products, please go to FreddieMac.com and you can see GreenCHOICE Mortgage and Choice Renovation. Let's talk about Choice Renovation real quick before we stop. Choice Renovation is our more robust renovation offering. So not only can you finance energy efficiency and water efficiency improvements with Choice Renovation, but you can do desired and required renovation. So let's talk about required first. You know, if you have a home where your roof is shot, your windows are not in, you have a floor that needs to be replaced. These are all things that you have to have in order to live comfortably in that home. So those are all eligible. But you can also do desired effects. You know, so from a real estate professional standpoint, let's say you have a buyer that you're taking out and you're showing them all kinds of homes, and they find a home because you were looking in a neighborhood. The neighborhood has the schools that they want. It's walkable. It's in the part of town where you can get back and forth to your parents' house the way you want. But the house is something just not quite right about the house. You know, the house is okay, but you wish you could have granite countertops. You wish that the layout was a little differently, was done differently. Well, with Choice Renovation, you can make that not quite house your dream home by financing the renovations into this loan. And the interesting part about this loan is instead of 15% of the as completed value in renovations and improvements, we'll allow you to go to 75%. So again, you could close on the loan, close on the funds for the renovation, and then complete the renovations after the closing. It's just a matter of finding the right lender that is approved to do this and has the expertise to make it happen. So I think our renovation suite is really appropriate for today's housing market and the aged housing stock that we're all running into in all the markets across the country. Let's face it, there's a shortage of affordable housing right now. And I think that if we take a look at renovation mortgage finance products, we can expand that universe by tapping into housing stock that's already there. So with that, again, this is my email address. If you have any questions, Christine, would you like to open it up for a conversation at this point?
Sure. Does anybody have any questions for James? I mean, this is very insightful, and I know BSCCU does a lot of green loans. I don't know if you guys are utilizing this product.
We are not currently utilizing this product. Currently, we are a Fannie shop,
Okay.
but Freddie is always out there on the horizon as to whether or not we should also be including Freddie.
Well, I tell you what, I think that we have, Fannie and Freddie. I've worked for both, so I know you are being served well with the Fannie Mae team. But take a look at this product. This GreenCHOICE product is a little bit different. We tend to offer the same mortgage options, Fannie and Freddie, but we're a little bit different on the GreenCHOICE piece. So at any time, if you'd like for me to make some strides or to put together a training session through your account team, I stand ready, willing, and able to do that.
Okay, thank you.
Yeah, VSCCU has been wonderful in financing projects around the state. And
Okay.
The thing that I know has been hard for them is to, and hard for everybody, is to get an efficiency improvement upgrade made at time of sale. But for those of us energy geeks, that's that's as good as you can get. So I guess I'm curious as to how, with HomeCHOICE mortgage, where an audit comes in. You say you've got time, was it 6 months to get the work done?
Right.
Where is this working really well? Where can we see how this is going? Our costs for most of the home performance with Energy Star program projects is more around 8,000 than the 6,500.
Okay, so an audit would be required in most cases.
They're going to need an audit, and you're going to want some kind of report.
Mhm.
We use the HERS rating for new construction. We have used the HES rating for existing homes in a pilot. We are going native and going to have the Vermont Home Energy Profile. You did list that there were other, other than HERS and HES, that other comparable systems. How would we prove that that's a comparable scoring system?
Well, at the end of the day, one of the things about Freddie Mac is we have a tremendous amount of confidence in our lender partners. So what our seller guide states is that the lender will make the decision that it's a comparable report. And we trust them to do that. But what happens, and a lot of lenders could feel nervous. They want more direction, but at the end of the day, they have what we call representations and warranties with Fannie Mae and Freddie Mac. So they're saying that, hey, this is a good loan. You are trusting us to originate this to a standard comparable to a HES or a HERS. And as long as they can rep and warrant that that is the case, we are comfortable with it. So they need to do their due diligence.
Well, they've been at the table as the profile's been discussed and piloted all along. So
right.
When they're not starting new. But is there some place where you're seeing a lot of traction with this, where there's a good lender and efficiency, utility, or organization coordination?
You know, the product, again, it was released late last year, and we have limited data set in terms of studying exactly what's going on with our Green Choice product. The white paper that I talked about earlier was done using homes that were scored with hers and his over the past 5 years or so. But as it relates to our Green Choice mortgage, we have a limited data set. But from what we can see, we've seen a lot of traction in California. We've seen a lot of traction in the southwestern states with this particular product.
Okay.
Well, thank you, James. Does anybody have any other questions? If not, I will let you know this is recorded and we will be sending it out to everybody. And I guess we have no other questions. And I really appreciate your time, James, and I appreciate everybody who attended.
Yeah, thank you, James. That was very interesting.
Well,
Thank you,
guys.
James. Thank you, Christine, for coordinating.
Thanks,
You're
Christine.
welcome.
I appreciate your time and attention. And Valerie, you guys, if you want to talk to Freddie Mac, call me. You have my number.
Okay, fantastic. Thank you.
All right, bye, guys.
All right.
Thank you, James.
Bye.
Very good.
Thank you.
Thank you. Very good.